BlackRock, DTCC, Fidelity. The entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
You said it. You finally said it.
I'm so bullish.
Andy's bullish. I'm bullish. We're bullish. We're going to the top. We're on 4th floor today. We're going to be on floor 1, and then we're headed straight to the moon, boys.
All right. Happy Friday, December 19th. It is the day of year in review for AI and tokenization. Be joined by Pei Chen, Teddy Pornpaya, and Chris Yin for a review of the 2 hottest categories in crypto. Rob, what's going on, man? AI, tokenization, very hot categories, not only in crypto, outside some of the strongest narratives, man. It's been a hell of a week. Good to have you.
I mean, those are the 2 categories that have broken through into the mainstream. So it's really no surprise that this is where the most action is. I think you can break each of these categories into, a dozen or so subcategories, and there's going to be winners and tons of activity that's happening in each. And so if I was to do that and I was to look at what are not only the sectors within each of these categories, but we can also talk about some of the teams that we think are going to be teams to watch in 2026. The categories that I would be paying attention to are obviously tokenization, which includes everything from RWAs to DeFi to stable coins. It's almost like tokenization has eaten all of these pre-existing categories, and they're all getting rolled up, if you will, into tokenization, because that is the portal, that's the purview by which Wall Street and TradFi is viewing this industry. And so within tokenization, obviously you got stable coins, you've got yield, you've got DeFi, you've got payments, and you've got a lot of the existing infrastructure is now all being referred to as tokenization. And I had someone reach out to me the other day, and they were asking hey, I think they saw JP Morgan's new tokenized fund. Obviously JP Morgan did that on Ethereum, and there's several different networks or venues by which you could tokenize these things. But this person has been tracking crypto, kind of like a crypto curious person, and they are pretty well versed in equities, finance in general, but not as well versed in crypto or tokenization. So they reached out to me and they said, what is really going on here? What would be a couple of resources where I could learn about what is happening here? And I let them know, obviously there's some companies out there like Securitize, who's worked with BlackRock. Canton Network is particularly popular when it came, like DTCC. Obviously they, are tokenizing a lot of their things. But the through line that I think is helpful to understand what is happening in this progression as it's being seen from the more traditional perspective is first, if you think back to the legacy of the stock market and Wall Street, you have physical stock certificates being traded like by stockbrokers, they're waving these slips of paper in the air. And in order to buy and sell securities in Wall Street, you had to call your broker. They had to pick up the piece of paper.
Bro, that's
they had to bring
crazy.
it to the other side of the boiler room, and they had to physically give the piece of paper that represented the stock certificate to the other broker that was buying it from them. So there was this whole physical infrastructure that was necessary, and that was the way that Wall Street and finance worked for 30, 50 years, if not longer, right? Hundreds of years, or even, thinking back, Dutch East India Company with the first, stock.
Yeah.
Then you have the internet. And so then you had this 20-year or so revolution, which is still in progress, but it's really like the digitization of all of that physical financial infrastructure.
Yes.
That was really from, like mid 1990s into like 2010, 2015, which ultimately culminated in high frequency trading. The next evolution from physical to digital is now tokenized. That's the third step in the process, where it's a more expressive form of a digital stock certificate. Obviously, now we've gone from physical to digital. We've brought all of this online. The next thing is bringing it on chain and making it composable with all of the on-chain DeFi apps.
Yep.
So I believe that's the next stage in the process. I think
that's a crazy history lesson from Rob.
I mean, it's 500 years in the making, and we're in year 5 out of 500 when it comes to this industry. And so it does kind of give you a sense of how early this all still is.
Yes, man. Yes. Okay, Rob. Let's get fired up, because that was tokenization. We've got the AI Super Cycle first episode coming up here for an AI year in review, which for me is probably the biggest year in AI history ever. I mean, this is just massive for this like the amount of investment, the amount of energy that has gone into this industry, both figuratively and literally, is insane. So guys, we'll be right back. We're going to get AI Super Cycle last episode of 2025, probably out now. AI year in review. Be right back.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its real upgrade, Polygon is now one of the fastest chains for stablecoin transfers and payments. Visit Polygon Technology to learn more.
Kalshi is the world's largest prediction market. You can trade on anything in all 50 states. Go to Kalshi.com to trade today.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Havachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Welcome back to AI Supercycle, our premier AI show, airing every single week, presented by Near. We cover the ins and outs of decentralized AI, privacy, and the future of this massive technology.
Near is the blockchain for AI and the execution of AI native apps. You can check out Near's latest AI product at near.ai. Now sit back, relax, and enjoy the show.
All right, guys, welcome back to episode number 14 of AI Supercycle, powered by Near, our friends over there with their private AI chat product they recently launched. Absolutely epic, as well as some other really cool features in their latest launches with Near Intense too. So stoked to have them as our partner for what I think is going to be one of the best episodes of the year. Here we have Pei Chen. We're going to do a 2025 AI year in review live on Rollup TV. Pei, it's good to have you on. Thanks for joining.
Thank you for having me, Andy. Nice to be here.
For sure. Rob's here as well. Obviously, no cam. Shout out to Rob for making it happen today.
Good to see you, Pei.
Good to see you, Robin.
Thanks for being here. Yeah, I'm excited. I think you have a very unique and interesting perspective on the market in general, but also with AI. So very, very excited to talk about everything that has happened this year in AI.
Definitely.
Yeah.
Let's kick off with your role, CEO of the Theoric Foundation. Huge week for you guys. Token launch, TGE, tons of community initiatives, just a lot of stuff happening. What is your role with this company? How is this week? Give us the intro, and then let's kick this off.
Yeah, definitely. So hi, everyone. I'm Pei. I'm the CEO and Executive Director of Theoric Foundation. So on a day-to-day basis, I oversee the commercial side of things, managing the foundation, very involved, and did a lot of work along the way leading up to the TGE of THQ. So we went TGE on Tuesday and December 16th, and it's been nonstop since then. Obviously, the market is super challenging, and as a company that is super focused on building the actual tech and the product, there's a lot to prove, right? And we are just trying to kind of keep our heads down and get through the TGE and now look at the stack where we are. But prior to the TGE, we already launched the Alpha Vault, which is AI managed DeFi vault focused on ETH growth strategy. It's a very unique product that it has a AI layer and also it has vault of vaults infrastructure, which means under the main vault, there's different strategies. We are able to work with both human and agent curators of strategies and making it just more fun. So I think, yeah, we can get started and can talk a little bit more about that.
Awesome. Yeah, I guess just a couple quick things to clear up for our audience. You guys frame this company as an intelligence layer. Kind of walk us through exactly how you guys are using AI today. I know you guys are doing policy cages. You have this Alpha Swarm product. Talk to us just a bit more clearly about what the unlock is with your product stack using AI, and just kind of what exactly is happening under the hood. I know there's a lot, so just kind of a high level overview. It would be great. Yeah.
Yeah, so you mentioned like the policy cage, which is essentially programmable guardrails that we put in place, right, to define exactly what AI agents can do and cannot do. So we think like we're not trying to limit the AI here. Like the brains is still there, but we wanted to kind of limit the what actual things that the AI can touch and handle and control. Primarily, the reason for that is to keep everything that's like stay safe, right? So let's say on-chain capital, the key management stuff around that, and when the agents can sign transactions, all of that is super, super sensitive and important to get right from the get-go. So it's kind of trying to use analogies like if you have a very well-oiled and high-performance car and you want it to be running as fast as possible, but you do want to define the track where the car runs on. So you wanted to lock them into a safe track, and that's kind of like how we want to think about when designing the product with AI at the center. But just going back to like generally what we're building as like an intelligence layer, it's essentially is thinking about that we're Theoric is unique because it's building not just like one product, but it's building a stack, right? The stack has like the top layer of the AI, we call it Alpha protocol. It's essentially is agent-to-agent communication and coordination layer. So it allows agents to register, discover each other, and communicate and coordinate, pay each other, all the basic functions that you will see in economy, right? And the second, it's almost like a layer one, but we're not really a blockchain.
Yeah.
And in the middle is the Alpha Swarm, which is kind of what you're referring to as the intelligence layer, right? That's really important because those are multiple modular. It's like a modular agent swarm, but has multiple agents that super specialize in different areas. So we use training those agents, making sure each one of them is particularly strong at doing what they do. So for instance, there's a policy agent understanding all the rules. There's execution agents super fast on-chain execution, automation. There is the knowledge agent that can grasp everything about a project, a token, a product, a use case, a DeFi protocol, a platform, right? Like all the knowledge specific agents can come together. So the intelligence layer is really describing the alpha swarm layer, where the swarm of agents can come together and complete very complex tasks, like providing liquidities to different DEX pools across different chains or different platforms, and being able to find the best yield in a specific asset like ETH or BTC or stablecoin.
Love it.
And they're able to do it simultaneous at once. So there's no single point of failure, because it's very scary to think about. December 2024, we got a lot of trader agents, singular agents that issue their own tokens and say, hey, please park your capital with us. We'll make you the best yield, right? And when that agent goes down, or the chat GPT, like AI chat interface goes down, you're done, right? That there's no accountability built into that.
Well, I think that's super important here. Okay,
Mm-hmm.
I think that this kind of guardrails, it's almost compliance, but it's like this guardrails, this really safety, security, focused mindset towards the evolution of this technology. It is, and to do that enforceably, verifiably, in terms of commitment schemes on chain, it's a really good match. It's a really good match made in technology heaven, which is really nerdy, but I think that's it's a good application. And when we zoom out and look at some of the stuff that happened this year, as we kind of roll into this year in review, the agents are just getting better. OpenAI launched GPT-5 over the summer. It's at the time its strongest AI model. Now we've got 5.1, I believe, or 5.2, and you double check. There's tons of improvements. 256,000 token context windows. You can read and process entire books, articles, conversations. You had these huge generative AI to transform operations of government with ELSA and Intact. Microsoft had this Project Ire. So just kind of giving you guys a bit of a sense of how much actual innovation happened this year in the category. So as we kind of zoom out of crypto AI, zoom out of kind of the intricacies here and look at to what happened, I guess let's just start this off. Robbie Pay, what is a couple words or a phrase or a sentence that you would use to describe 2025 in AI? I can give it a shot first. There's, I would just say extraordinary in terms of growth, right? How would you describe the evolution of AI in 2025? And then let's get into some of the specific events, prediction markets, and more. Rob, I'll pass it to you actually first, if you have something to add there, and then let's go to Pay.
It's difficult to sum up in entirely in one word. I almost want to use two words, one to describe the first half of 2025, and then one to describe the second half. The first half felt pretty groundbreaking, as we took a lot of the machine learning, a lot of the deep neural network math that was used, but it finally became tangible. Maybe that's an even better word. Is finally LLMs became tangible in the first half of 2025. And that's when we got LLMs, and that's when they started to do things on chain, and a lot of that was really exciting. These things have gotten a lot more usable and a lot more. They've gotten a lot more context, and I think they're a lot more believable and useful and effective. The second half of 2025 is when I think we got much more incremental returns on the performance of these things. I guess I would probably use a word like integrated. The second half of 2025, I didn't see a lot of model improvement. I don't think these things got drastically better with each of the releases. We saw that in ChatGPT 5. It sort of fell short of expectations. 5.1, 5.2. These things are just very minor increases in the performance. But what I do think was what I think happened more so in the second half of this year was that we started to get these AI products integrated into the existing apps and systems that we use on a day-to-day basis. We saw Gmail like now has actual AI responses baked into it. One click and it's actually pretty good. You see this in Google Sheets. You see this across the entire Google suite. We're replacing search across the board. So I think the first half of 25 had drastic improvement in the models. The second half, we're starting to make improvements in the UX, and we're starting to bring them more or make them more integrated into our everyday systems. Those would be my 2 words: groundbreaking and integrated. Pei, I'm curious. I'll kick it over to you. What do you think if you were to come up with a word or 2 to describe this year in AI?
I definitely echo what you said, Robbie. Like all of this, it feels like a much closer in reality. I think I would use the word that this year we witnessed AI going from capability to operational reality or operationalization, right? So you start seeing large enterprises and companies are putting AI in front of the audience, the users. They're stepping to demos. They're showing up at workplaces. They're handling much more aggressively and directly with customers and doing research, writing codes, and managing even now like capital, right? So they're really coming into operations. So the second point is now how do you address the trust issue? Because capability-wise, AI can do all the stuff, but are they reliable? Can we trust them? How much capital can you put with them and other information and data, right? So I think you start seeing the focus of the question start shifting from can they do it to like, should we trust them doing it? And from my corner of world, we're just so focused on the niche of AI and crypto intersection, which is where I think the agentic AI is being mostly discussed, right? Like we're now Web2 SaaS company trying to bring AI into the product and day-to-day and automating things, but we really think of AI as agentic individual, like an economic actor. So I think it is where actually I think you start seeing this year more of a kind of the rise of agents and autonomous agents is now becoming a real thing. So yeah, so like we have a lot of kind of definition or work around how do we define the scope and the power of the agents, how do you make them autonomous but also within control, have like measures in place to make sure they don't go off rail and drive things off cliff, right? The final thing I would say is, this is just like where I feel like AI is now meeting the real economy, having them managing capital, coordinating resources, writing legal contracts and negotiating everything, right? This is where you move the economy from software based to AI and economic agents based economy. So it's super exciting.
We're doomed.
I think we're being replaced in certain areas, but it's for good reasons.
Just something to add real quick there. I saw this tweet from CL207, the OG cat on crypto Twitter. He's like, I'm getting bullish on Amazon 2026. And I'm like, I go down and I start to read why. And he's like, why? Because I think that Amazon's going to put out a release saying we're going to replace half of our employees with drones and robots by September. And then their margins are going to look a lot better. Rob, did you have something to add?
I mean, just on that, I think hardware and robotics are very intertwined with the AI rise as well. And I think that's when a lot of this and efficiency and a lot of these new things start to get unlocked when we use AI as the software in a robot's brain, if you will, and then you get the best of both worlds. But I wanted to ask Pei a question actually, because we've seen how difficult it is to bootstrap liquidity in DeFi, and Theoric is kind of out this cross section of DeFi and AI. And something actually occurred, just a quick tangent here, is that something occurred in my mind, like prediction markets are becoming very, very popular. There's a lot more teams that are building on these prediction markets, but it's very, very difficult to bootstrap your own markets, just like it's very difficult to bootstrap your own DeFi markets. And so I wanted to ask Pei, are you guys looking to generate liquidity in your own smart contracts, kind of rise that through, or are you guys mostly focused on, look, we're gonna be like an aggregator or a portal, if you will, to existing DeFi apps. We're going to allow you to deposit in those, and we're going to provide some of the AI capabilities to coordinate amongst those apps. Just that's I do think that there's kind of a distribution play and then there's a tech play. I was curious which side you're taking.
It's spot on. The interesting context here is that we started with a letter. We really wanted to kind of just like dive deep into agent being the best alpha generator of the entire industry. Like forget about, I'm not calling names, right? Forget about like Math Edge and all the RE7s, right? Out there, like we want agents to be the curator and the generator of the strategies. So that was actually when we started building Alpha Vault, we really thought about the first move would be doing this hatched LP strategy vault curated by agents purely. And we actually used AI to do all the back testing work and prove that very substantial amount of alpha can be easily generated in a very small amount of TVL. Let's say like 25 million can generate like 25% of that as an alpha very easily as AI. But when it comes back
That's a crazy claim. 25% returns or alpha on $25 million is just easy for this AI. That's
you can really deploy that agents and fully trust it to do, right? That's back testing. And
I'm
then
not giving any agents my private keys, guys. Sorry about that.
Yeah, you can manage the key though.
There you go. There we go.
Or at least be a majority signer. Okay. So we thought about that, and then there's a bunch of obviously like complexities going into that. You need to if it's ETH, growth strategy, you need to constantly hedge so you arrive at delta neutral in ETH terms. ETH is falling in this market, so that is not, even if you're like a super maxi of ETH, you have some concern for like accumulating ETH, right? So I mean, based on like kind of market conditions, we did a lot of pack testing. We know it can be done. This is something we're going to build in Q1 2026. But we decided before the TG, we decided to take the second round, which is what Robbie described as an aggregation layer or distribution play, which is essentially why we did the allocated agent first in the currently live in the Alpha Vault. So Alpha Agent is kind of like a portfolio manager and a risk manager in digital economy. So it sits at the main vault level and it monitors, it takes in the TVL and makes a decision how much of that TVL it's going to put in each of the sub vaults that has distinctively different diversifying strategies. So right now, Alpha Vault has 2 sub vault and 2 curators. One sub vault is the Lido strategy vault. It's a leveraged looping strategy and curated by Mello, who happens to also be our vault infra provider. So they've seen a lot of different strategies in their time of building Mello core vault, right? And the second is the Chorus One MEV Max. So this is using like OS ETH and deploying into the Aave ecosystem. They use a different strategy, also with ETH as a core and the base asset. We're trying to use at least those 2 vaults to really perfect the allocated agent capabilities. And over time, in Q1, we're going to add a 3rd vault, and that will be the hedged LP vault managed by agent. And that's something that we're putting a lot of effort to.
I think it's honestly kind of hilarious that the first industries to get innovated by AI are these like white collar jobs, like
hedge fund managers, taking 2 and 20,
financial advisors. Like this robo advisor is going to be so much smarter, so much safer, so much better than any financial advisors. And all of the tokenized funds are going to be the tools by which these robo advisors are going to offer their customers.
It's insane. It's insane.
It's like you gotta be like in 2035, you've got to be like you've got to have some like artistic talent and be like a singer, songwriter, dancer, or you've got to be a plumber. Like there's no white collar jobs that are left.
I'm glad we didn't choose financial advising as our category of choice for the career, all of us here. Not there's anything wrong with it, but yeah, Coinbase just rolled out their advisor product on their announcement on Wednesday, and that thing is going to outperform and really be there in that kind of assistant AI fashion. Guys, let's get into some of the prediction markets that we have for models, for AI training, etc. We'll be right back. Quick break, and we'll bring these up on the screen for you. Talk the AI models, main best model, and a couple of. Let's go to a quick standby, guys, and we'll be right back.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io. Yeah, there we go. Alrighty, guys, AI year in review. Here we go with some of the prediction markets. Rob, best AI at the end of 2025 from our partners at Kalshi. Right now, Gemini is absolutely crushing it. 92% chance of being the winner because of their Gemini 3 Pro launch. Grok is 6%, ChatGPT is 3%, $15 million of volume on this market. Guys, I must say, I spent most of my year using ChatGPT 5 when they launched it. Since then, before that, it was kind of a mix. I've been using Notebook LM on Google and Gemini Notes. Gemini Notes are incredible, better than Fireflies for calls, the Google Doc. Like the Google integration here for Gemini, plus this new model for videos and images is insane. Gemini 3 Pro, if you can see on Kalshi, right at about August, September, you saw how Gemini just started to fly. You see the second half of this chart. You see in September down below, Gemini is the green one. It went kind of like parabolic run from about 50% all the way to 90% where it is now, starting in about August. And that's very much aligned with the Gemini 3 Pro launch. Guys, what's your take? Pay, Rob, what do you guys think here? Is this right? Is Kalshi right? Are the people putting their money on this right? How do you guys think about this? What is your favorite model? What's the best AI at the end of the year?
I think like this looks it looks right to me, because from a personal experience, we use AI a lot of work, and not only just for product development and back testing, but also communication, marketing, and personal messaging posting, right? Like instantly you realize, like, after using ChatGPT for quite a long time, and then you see the Grok, and then you experience Gemini. Gemini is like kind of like by far the best of all, like just overall experience and overall output. Because I constantly compare the outcomes across all three of them. I would say occasionally I go to Grok. I like the sense of humor that Grok has, like the others don't. It just has like that like Elon Musk footprint there. It's very funny. And so like if I want a good joke, or when I say like please mixing something like a funny joke in there, I go to Grok. But Gemini consistently, I think, better above than others. Robbie, I don't know how you feel.
Yeah, I primarily use ChatGPT as my main driver because it kind of had the first mover advantage in my own technology, and it had some, like, it just took up real estate on my phone, and then I just went to it, and I had that behavior just baked in. I think what's interesting about these markets is that I actually looked a little bit deeper into this, and the way in which they resolve which model is the best is according to this website called LM Arena. And so what you can do is you can put in a prompt into LM Arena, and it is essentially a roll-up or an aggregator of all of these models. And then you choose which model you think gave you the better response. So it has this mode called battle. You put in a prompt, and then it gives you two responses for each prompt, and you pick which one. And so what this means, but when you say best AI, is that according to this website, more people are choosing the response from Gemini than any other model. And I think this is what we're going to see, I can even anticipate, like in Theoric, you have robo advisors using different models and they're competing for your business and for your capital. And I think this is the schematic that we're going to see a lot more of. Personally, I like to use Gemini for any kind of deep research. If I know that there's something that I want to do, like just one back and forth, like one cycle, I want to ask one question, I want to get one answer, like search something I would normally Google. I use ChatGPT for that. Anything that I know, I would probably click multiple links. I would probably check multiple sources. That's when I go into Gemini and I do a little bit of deeper research. But I do like Grok too, because Grok, I do find myself pressing the little button at the top of people's tweets just to like
the
learn a little
context
bit more
searching
about
is super
the context
clutch.
searching on Twitter is where I like to use Grok.
Completely agree. Rob, I think you're actually spot on. And Pei, this probably is very applicable to how you guys are thinking about adoption from Theoric's perspective, which is ChatGPT, the app was on my phone, Rob, as you said early, and it was just there now. And it was like I was speaking to it. Great. Notebook LM got on my phone. Grok got into Twitter and just click the click. And so it's like, if there was an AI Grok, for example, let's say a Theoric agent model that has their automated agent stuff, if that was in Rabby Wallet and I just could click it and like talk to it and use it, that distribution integration is like incredibly useful because I mean, obviously, right? There's for obvious reasons there, but like, I think Rob, like, it would be funny to actually ask that website, LM Arena, which model it thinks will like be the best at the end of the year, and watch it kind of have different models show their biases if they think they're the best or if they think somebody else is the best. And anyway,
I'll do that now and let's check back in at the end of the show.
Pei, anything to add there on what Rob and I just kind of said there?
Yeah, I think it makes a ton of sense. I mean, I want to comment on what you just said about the distribution and kind of baking into the stickiness of user behavior platform, right? Obviously, there are two products we're talking about here now. Since TGE, we have THQ is actually a product, right? Like we need to now think about the stakeholders for that token itself. But then on the other side, Alpha Vault where the agents and AI is used a ton, and we want to push to the real human users and attract TVL, continue to build on top of the 24 million that we currently have. We want to surpass 100, want to go to next. The more strategies you deploy, the more TVL you need. Yep. All of that stuff, right? So we definitely, right now, we are foundable, I guess, like accessible through like our own UI, but also Mellow front end, where yield hunters can go to Mellow, look for all the vaults, they'll see us. There's Turtle Club, who is our TVL Bootstrap partner. So they have a liquidity dashboard for us. They have the campaign for the TVL, where you can see more of the points, kind of how everything's calculated and the accumulative yield, so to speak, like not only the ETH yield, but also others. I think we need to do more. I think we need to get on all the dashboards for vaults. We need to get into the apps that live in people's phones, right? So the Phantom, the MetaMask, all the other Coinbase wallet. Definitely. We're in the base ecosystem, right? So we need to be in that app. Yep. So the app will be naturally coming.
And that's why I think Gemini is winning. Like, sorry to just cut you off there about like the app thing, but you just like spurred me off where it's like Gemini has a really good model, and like the Gemini 3 Pro that they just launched is great. But once again, on Google Docs, it's there. On Google Meets, it's there. On on Gmail, it's there. Mm-hmm. On Sheets, it's there. It's just like, it's just there. And it's so deeply integrated into Google's stack, right? In this example, in your example, in the Theoric stack. And it's like, it's just there. And it's so useful because I guess like the big thing here, Rob, is this kind of concept of this MCP evolution too. It's this cross multi-platform kind of like API calls that is really great. So it's like for Pei, it's like, can Theoric's agent work across one chain, one app, and another app on a separate chain, or X, Y, and Z, right? In Google, it's like Notes, Sheets, Meet. It's kind of like this multi-platform, multi-use case approach that is making these AIs better than others, in my opinion.
Well, I think that's why the word for 2025 in AI is integrated. Like that is, at least for the second half of 2025, because that is what I'm finding myself use AI this way. The native integrations, I think, is where we tend to go. I use Grok on X. I use Gemini on Google Docs and Google Chrome and Gmail. And then ChatGPT, I do think, has started to take on search. I think Google was late to the party in integrating Gemini into Google. And so it became more useful to use ChatGPT, especially on voice mode. That's how I like to use it, and use it as my search modal. So I do think now that these LLMs are getting integrated into social media and browsers, that is going to be the moat, and it's really an extension of their existing product suite. So in order for Grok to get more distribution, and distribution and activity is going to be what separates the performance of these models, because the more data that they have and the more prompts that they get, the better trained they are. So I think Grok as a model is dependent on how successful Twitter is in gaining more social media market share. And Gemini as a model is dependent on, the existing Google product suite. And these things are going to start to diverge. I think right now they're very, very similar in their models, but because they're being trained on very different data, I think they're going to ultimately become more niche and optimized for those use cases.
Yeah, love it. Love it. All right, guys, let's move to the next one and the last one, the second and the last image to talk about here for the AI Year in Review 2025 is which AI company will have the best coding model on January 1st, 2026. Now, guys, as you can see here, when the distribution part of the equation, when the multi-asset, the multi-platform, multi-functionality kind of concept is stripped away from, different platforms and distribution and get directly down to coding, Mr. Sama is in the lead. 85% say Sama, 16% say Anthropic, 3% say Google. Guys, I have not really used much of these coding models, Rob, Pei. I'm not sure if you guys do a ton, but how would you guys rank this? Is this right? 85% OpenAI? Are they just that much better at coding than Claude and Anthropic? Are they just that much better?
Pei may have more than I do on this. I did type this into the notebook, or it gives you two different responses. Assistant B says, clearly Claude 3.5 Sonnet is the best. The other one says, GitHub Copilot if you're already using VS Code for more powerful general purpose coding. No IDE integration needed. Sign up for GPT-4 via OpenAI. So there's definitely a sense of competition.
Dude, that's so funny that they're biased.
They're absolutely biased. They're talking their own book. Pei, what do you think?
Pei, do you AI for coding agents?
Yeah. I mean, we're just one of the many companies that heavily use AI, right, in day-to-days and research and product development. I can vouch for Claude being kind of the primary Claude from Anthropic. So I guess Anthropic in this case. But yeah, I'm not sure the number, but like Anthropic definitely stands out as
on
the
the
one
coding
that
side.
Correct. Coding, back testing, reasoning training. It's the mostly I heard I've been hearing the most from my engineering team, research team, right? So I know that they're using it heavily for developing Alpha Swarm and different models and thinking about the trading strategies and back testing the outcome, the yield, and all of that. Yeah, I feel like pretty strongly about that.
Interesting.
I'm sure, yeah, OpenAI is like overall in the rapid prototyping and coding is probably still mostly used or heavily used.
Isn't it kind of an interesting phenomenon where your engineering team at Theoric is going to be using these OpenAI and Anthropic, primarily, as you said, models to help code, and then what they're trying to code and create is another separate AI model agent. It's like AI inception. It's like, what's going on here? Like, we're using the LLM to create another LLM, but it's very specific use case type of one. It's really interesting, isn't it? It's weird. It's weird.
Yeah, we're entering a agentic economy, right?
Yeah, on both sides, like a full loop.
Yes. Yeah.
There's no 401k over at Theoric. You use Theoric to manage your 401k.
Yeah. And Theoric's 401k management tool is brought to you by whoever trained Anthropic, and how good, obviously, their engineers are, and everyone's has engineering work. It's not like just, press a button and things built. But obviously, I mean, let's just say if we're gonna make predictions about kind of on the same train of thought around like the jobs and the Amazon and the drones, you ought to think junior engineering roles and the idea of doing a comp sci major in university has diminished significantly.
Oh, I would push back on that.
Okay,
I would say,
let's talk about it.
look, AI is a calculator. Like you don't see like less mathematicians and statisticians and computer scientists and all these STEM oriented careers diminish as a result of a more powerful calculator being created. Go back to like the printing press. Did you think, our authors and journalists and writers were going to go out of business? No, it actually gave them more tools and a more powerful means of distribution. And I think that's what's happening.
I think
here.
we have a fellow math major in the crowd here, Pei. I'm not going to say who it is, a math and philosophy major here from the University of Florida who's really upset that his math major is not really worth it. He can just ask AI anything at any time. Like,
Yeah,
why do I need a math major?
I use my math degree every day as a podcast host.
Hey, what do you think about junior engineering roles going forward? How do you see coding evolve with AI in 2026? And honestly, I think it'd be cool to get your perspective too, more specifically on some of these Solidity and EVM-based programming coding agents, which are really firmly able to now do smart contract development, white hat exploiting, if you will, white hat vulnerability searching, etc. How do you see the evolution of programming with regards to the broad scope and then in crypto native land as well going forward?
So I think I still see the great need for smart contract developers and talking about the human ones, not the agents. We need them because, like, I think because this space is evolving so fast, there's always integrations with each other. There's nuances. There's edge cases to test. Like you just can't predict what kind of plumbing and smart contract level integration will involve and what kind of scenarios, and we're creating new use cases as we move forward, right? As an industry in general. So I do think we're desperately, we're looking for smart contract developers. I'm not gonna lie, we're looking for strategists and we're looking for all the technical talents as we kind of move forward as a project. But I think, like junior engineers, I think will enter the market with a very different outlook, and they need to understand that their strength needs to be a combined, how to work with AI and work with AI tooling, right? So meaning like you got to be good at like vibe coding because it kind of improves your efficiency and your speed of turnaround of the tasks. But it still needs someone. You're not going to ask someone in marketing major to do engineering work because it's like now it's so trivial. You still want someone have the background of coding, background understanding how to audit and how to interpret codes and being able to capture the hackable like areas, like look for the bugs, right? That is still very much needed. And I think a math background is very, very relevant in this world. Like as we move forward, everything is kind of algo driven and math tied, right? It's going to become a lot more numbers relevant versus like content driven and all of that. So yeah, I mean,
insane.
The job market will be very different, but you need to be able to do the job, but with like an AI in the back of your mind, basically know how to use them to accelerate your work.
Pei Chen, it's been an absolute pleasure having you on today. What a week for you guys at Theoric. Fun conversation today. This has been an incredible year in AI as well. Guys, it's AI Super Cycle episode 14 signing off here. Pei, thanks for your time.
Thank you, Andy. Thank you, everyone.
All right, guys, we'll be right back. Quick standby.
Thanks, Pei.
We'll say bye and get our 2025 year in review tokenization segment up next. See you guys in a sec.
See you.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on-chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its real upgrade, Polygon is now one of the fastest chains for stablecoin transfers and payments. Visit Polygon Technology to learn more.
Kalshi is the world's largest prediction market. You can trade on anything in all 50 states. Go to kalshi.com to trade today.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Havachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform that is ready to go. Head to infinify.xyz.
Halliday is unified crypto payments. Give your users more wherever they are. Go to halliday.xyz to never write a smart contract again.
Open, stable, borderless. Frax is building the next generation of stablecoin infrastructure for the digital finance era. Visit frax.com to learn more today.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on-chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its real upgrade, Polygon is now one of the fastest chains for stablecoin transfers and payments. Visit Polygon Technology to learn more.
Kalshi is the world's largest prediction market. You can trade on anything in all 50 states. Go to kalshi.com to trade today.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Havachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform that is ready to go. Head to infinify.xyz.
Halliday is unified crypto payments. Give your users more wherever they are. Go to halliday.xyz to never write a smart contract again.
open, stable, borderless. Frax is building the next generation of stablecoin infrastructure for the digital finance era. Visit frax.com to learn more today.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Welcome back to another episode of Money Moves Fast, our premier weekly show covering all things tokenization, RWAs, and payments.
This show is made possible by Polygon, the leading blockchain for payments and RWAs. Money Moves Fast is the convergence of Wall Street and digital assets. Now sit back, relax, and enjoy the show.
2025 year in review, tokenization, live on Rollup TV. Chris Yin, Teddy Pomprina. Guys, GM, welcome.
G Plume, bro.
Thanks
for having us.
Good to see you guys. Thanks for coming.
Today's show is powered by
likewise.
RWA XYZ, apparently. So shout out to those guys. They're absolutely crushing. Great tool. And guys, it's Money Moves Fast, episode 14, powered by Polygon. An amazing payments chain, fast, cheap, great payments, stablecoin transfers. I'm sure we'll see some of that on today's show. It's the last one of the year. It might not be the last one of the year, but it's definitely the 2025 tokenization year in review. Chris, Teddy, it's not your first time on the show. Great to have you back. Friends of the show. What do you say we dive in?
Yeah.
Love it. Let's get it. Thanks for having us.
Well, I'll kind of tell you what we're looking at here on the screen. You'll see the first chart here. What I think is most relevant about this one is this Janice Henderson AAA CLO. Pretty much said, we're going to go live, and oh yeah, we're going to take the #1 spot shortly thereafter. And kind of tested things out with like 50 million, and then quickly 10x that to like 500 million and beyond. I would just love some insights from you guys as to the types of RWAs you're seeing get the most traction. I hear CLO get thrown around a lot. Maybe you could just like unpack some of these terms. When people say AAA, what does AAA mean? CLO, what does CLO mean? Give us kind of like the basics. People have been hearing about tokenization all of 2025. They want to know and get acquainted with it, because this is a trend that we believe is going to stick around in 26 and beyond.
100%. Look, it's a good question, a good point, because RWAs are newer in theory, right, to crypto, but people don't really understand what these things are. I mean, look, even me and Tay didn't understand what these things are for a while, right? We had to learn and figure out real time as things were going, like what these things mean, how to think about ratings, how to think about asset classes. Big picture, though, it comes down to two things, right? Risk and yield, right? And those are the two dimensions that kind of come back and forth. You have some sub things like duration and all that, but big picture, you're looking at risk and yield. And the starting point for everything was T-bills, right? Because T-bills, were the sort of dominant asset that RWAs were kind of, positioned against for the last, 2-3 years, because the rate was high. So the risk-free rate from the Fed was, 5-ish%, give or take. And so that means you could put basically any amount of money into T-bills and you could get a 5% return. Right, very, very stable, very safe. It's completely liquid, right? It's usually these things are T+1, T+2, which means you can withdraw and within a day or two you get your money back, and the risk is basically zero, right? It's basically is the U.S. government going to default, right? And so very, very straightforward, clean, and easy asset. But as with everything in life, right? You taste a little bit and you want more, right? And that's kind of where things are going, right? So you start with that, and people are beginning to sort of want to ramp up on the APY and the yield. And now we're getting into more esoteric stuff. And we're seeing a bit of a spread. You have two dimensions. You have kind of moving up the ladder slowly from, T-bills to things like CLOs. We could talk about them in a second. And then you have other ones that are going straight to the top and now coming down. And we're kind of meeting in the middle. We'll find out where people coalesce around and what ends up being like the dominant story. But there are, two sides of the pole right now, right? It's always like a bit of a barbell, right? And so you have T-bills and people are moving up a little bit because the T-bill rate's also coming down, right? We've been waiting for the whole year for Jerome to get up there and say rate cuts,
Bye, Jerome.
right?
May 2026.
Exactly.
See you later, buddy. Trump's
Hell
in
yeah.
office now, basically.
Hell yeah, the golden bull run can finally start, right? So that's what's happening next. So as these rate cuts are coming down, T-bills are going down, right? The rate. So this 5% is down to 4, now to 3.5-ish, right? And so that's going down. So people are now searching for new yield, new places. And obviously you have to dial up the risk and dial up the duration in some cases. So CLOs are the next best thing after the T-bill, right? So you're not getting a tremendously higher difference in the yield, but you're going from maybe 5, depending on the type of CLO, to a 6 or a 7, right? CLO stands for collateralized loan obligation, right? So these are like fully secured assets. You're borrowing against something very safe and straightforward, very deep liquidity against them. So you can still withdraw a lot and put in a lot of money without affecting anything. And you can still withdraw in basically 1 or 2 days for most of these assets. And that's what this Janus Henderson fund is. It's a AAA CLO fund, right? So what you can do now is put any amount of money. We see with Grove here, put $500 million in. Right, so it's a single LP into the AAA CLO fund from Janus Henderson through Centrifuge, and now they've got $500 million sitting in there, immediately skyrocketing to the #1 asset, right? Wow. When it comes to this thing, right? So it's been a big move because now you're getting real 6-7%, right, on a $500 million asset, right? That's just not a thing you see elsewhere,
and
right?
and
so that's been a huge
risk
move
too, right, Chris? Like not T-bill level or money market level low, but like relatively low. And so we had the Stable Watch guys on yesterday doing a stable coin, kind of yield coin year in review, if you will.
Yep.
And we talked about how Sky has done an incredible job of diversifying their yield sources.
For sure.
And how that is going to lead to their success over something like an Athena, which just solely is reliant on the basis trade currently.
Yep.
And I think what you're presenting to us is exactly what somebody like Sky is thinking effectively, and other RWA providers, and then obviously like these funds. So just to be a bit more clear here, and then Teddy, I'd like to get your perspective here on the institutional fund metric side. So, if you look to the left of the chart, January 1st, end of it is obviously kind of where we're at now. We saw effectively a rise from, you could call that, I would say $100 million or so in the beginning of Jan. And then that thing quickly rose to $1 billion come August. So we 10x'd or so from January to August, 10x'd. Then we did another 3x nearly from August to November, basically until middle of November. And now it looks like we're about to go higher. So if my math's not mistaken, that's a 30x. With that being said, Teddy, where does this go 2026? And what do you want to add to Chris's point, just generally on the risk adjusted yield kind of dynamic happening today?
Yeah, 100%. I think Chris basically hit the nail on the head. But to be honest, what Chris said wasn't super obvious to folks when we started building out Plume. The fact that you could literally deploy in size into these more liquid, assets that are actually generating real yield back to users wasn't really a thing until Plume came around, right? I think people were just, yield farming, going between different chains, deploying into different DeFi protocols. But as we've seen in the past few months, DeFi isn't as safe as RWAs. It's crazy to believe because, when we first started Plume, people were like, oh shit, like RWAs, like, well, what's actually happening to my money here? So what we're seeing right now, and like you just described, like this exponential growth in RWAs is basically, a huge information gap being filled in between, right? Like a lot of folks are finally understanding the assets that we're bringing on, whether it's like private credit, treasuries, all these different alternatives on Plume. But the biggest thing that, we're doing differently is actually allowing permissionless access to these different assets. And, in 2026, what Chris and I are starting to see is a lot of folks that have been very traditional players in the space, like the Securitizers, all these big players in the RWA space that we're close friends with and that we're partnering with, they're actually asking for help from us to really deploy these assets permissionlessly into these different distribution channels to really gain, real users and activity and utility on their assets. So I think, this year was a pretty good start for RWAs. I think it's still pretty early on, if you ask us.
Yeah.
But all of the places, all the pieces of the puzzle are being put in place where the regulatory regime is, opening up a bit. A lot of institutions are coming in this space. JP Morgan, dude, they've been researching Ethereum for years, and they're finally deploying some funds on. So a lot of stuff is happening, not only in the US and actually a lot globally. So in Asia and the UAE, Chris and I, we just came back from a long trip out in the Middle East and in Asia. And I think what a lot of folks don't realize is the RWA opportunity isn't just stuck in the US, right? There's a lot of velocity in Asia, a lot of velocity in the Middle East, a lot of velocity, honestly, anywhere outside of the US.
A lot of capital too, you know what I mean? And they want to put it somewhere, they're it's like investment seeking capital from large entities. And Teddy, just to kind of, double down here, basically what we're saying is RWA's had their breakout year this year. Tokenization really had a breakout year. I think where you guys are looking to kind of take this industry to the next step, and generally where it's going to go, I believe, is just like, as you guys say, RWA Fi. We're just generally actually taking these assets, bringing them into on-chain ecosystems, and then creating on-chain economies with them. And so, guys, I'm going to just put you both on the spot, and then we'll move on from this fun question. Is Janus Henderson going to dominate 2026? Will we see them at the top of the board on December 31st, January 2026? Will it be Superstate? Will it be somebody else? What is your predictions, guys?
Yeah, that's a good question.
And if there's no answer, no comment, we can move on. But come on.
I think
Give me a thesis,
it's hard to look at anything in the future with any certainty. Look, I don't even know what I'm doing tomorrow, right? So that's probably the starting point. But I do love to predict. I do love to throw shit around no matter what. So I would say this. Look, I think the answer is no. Right? I'm a big fan of Janus Henderson. We work with them all the time. We have a bunch of stuff there. So I think they're high quality products, great people, and great services. But I think people are going to want to diversify, right? If you look today, if you're on the RWXYZ page right now, if you scroll down a little bit, right, into the table below that gives you the stats on each of these things, right? If you look here, I think the number one distinction here is if you look at there's a column for holder count, right, across these things, and I always think that's what matters more. Right. And if you look at the holder count for these assets, unfortunately, you look number one, 10 holders, number two, 45 holders. None of those is one holder.
That's
than
why
8
it always
holders,
looks
right?
so sketchy, man. You're like, who's actually using this stuff?
Correct, exactly. And it's not to say it's a bad thing. You have to start somewhere. So I'm very positive. I think it's actually incredibly bullish and good that this is happening. But we need to go to the next phase of people actually using this. And I think as that comes into play, we've seen with things like Athena as an example, right? USDE, great product and a great team, obviously. Shout out to Athena. I think they've done incredibly well for themselves. You look at things like Maple, you look at USDS, right? You look at the holder counts for those and the TVL that goes for those as well. We're not talking 1 billion, right? Athena got to 12, 13, 14 billion. Maple's up to 5, 6, USDS has always been kind of 5, 6, 7, right? So these products are retail money, right? Being able to get to 5, 6, 7, $10 billion in TVL overnight as well, right? In the course of a year. And that's a much more diversified set of users. And so just say when you tap into that user base and actually have real users against this thing, the TVL skyrockets in a new way. So just to say, just provably, if you look at USDE as an example, they have hundreds of thousands of users, right, and up to 10, 12 billion in TVL. So if you look at that alone, if you can get you have one user or two users getting $1 billion in TVL, right? When we see this begin to crack into the mainstream next year with crypto and billions of dollars flowing in and hundreds of thousands of users, there will just be more money coming in, and there will be new winners to be crowned. So will it be Janus Henderson? Could be, but could be a bunch of other things. And so I think there's a good chance it's something else.
It's hard to say who the winner will be next quarter. You know what I mean? So exactly. It's like, all right, guys, let's flip to the next sheet here and data point. I think it's going to be something around just generally who's kind of dominating on the network side. I think that a lot of people think about tokenization from the fintech perspective, but it's also obviously the yin yang here is the off chain and the on chain, right? And so we got to talk about the on chain. Ethereum, number one, dominating by a country mile. We were told back in the day, 2020, 2021, 2022, institutions are really coming this time. Ethereum's credible neutrality was going to matter. It was going to be important to have this credibly neutral, decentralized, censorship-resistant base layer. What happened was Securitize went multi-chain. Everybody went multi-chain. Nobody cared about Ethereum. Ethereum was left in the dust, theoretically in mind share, and kind of some believers were kind of like, guys, I thought institutions were going to come to Ethereum only. Well, we got L2s, we got all this other stuff, all L1s, et cetera. But by the numbers, it's quite clear that Ethereum's dominating and will continue to dominate, I believe, in this RWA category. How do you guys think about the chains? Plume's in there. Red, I see red. It's still day one, boys. Yeah. It's still day one. Okay.
That's right.
Exactly.
But how do you look at this list from a competitive standpoint? From a non-biased standpoint, even, how do you look at this list as a founder? And I know you guys both want to dominate here. Where do you see this going?
Yeah, Teddy, please go for it.
Yeah. I mean, I think, look, Ethereum, obviously they're taking a big part of the chart because they've just been around forever, right? When a lot of the folks Chris and I spoke with in the beginning days, they're all starting on Ethereum because that's what they're used to. It's basically the chain of choice for a lot of institutions and a lot of these folks coming in. And then you're right, like over time, a lot of these players started coming in. My honest opinion is a lot of these general L1s, L2s, they basically saw something hot and shiny within RWAs, so they kind of pivoted towards RWAs, and they were trying to do anything to be relevant in, on crypto Twitter amongst everyone globally talking about crypto in general. And then there's like a whole subset of, more focused chains like Plume that started popping up. And so you can see here, like that's on the chart, I think Ethereum still holds a big part of this chart because they've just been around forever. They've been battle tested. A lot of folks are very used to deploying their assets and funds there first before going multi-chain. But as you can see, there's a lot of other players that, to be frank, I don't even know what they're doing in RWAs. I don't know why they're here, but
there's the competitor in them.
Yeah.
So I mean,
but
look, Teddy,
I think.
Yeah, please.
Oh yeah, go ahead. No, go ahead.
I was gonna say, so this thing started at $5 billion or so, just over $5 billion, right, Rob? Around early Jan, and then this thing ran to almost 20 billion, so a good 4x this year across the board. What do you guys think led to this drive? Is it just this tokenization kind of like mania, if you will, that's been going on? I mean, this thing is up a good 4 times. The stablecoin value, look, as you can see, we're about to cross 300 billion. Obviously, a lot of this was driven by stables, but this specifically is not including stablecoins. This chart does not include stables. What drove this trend, and what do you expect to be the main drivers for next year?
Totally. I mean, look, I think the short answer is when there's a chart and a goal, then people play into it, right? I think that's the real answer here. The RWA, this stuff is in no way uncorrelated to the rise of RWXYZ. Again, shout out to Adam and Charlie, right? I think they built a great thing, and it's wonderful that like people can actually see this and begin to coalesce on what are the right ways to look at it, what are the right metrics, and they keep adapting, updating things at the time as well, right? So if you look at this, it really comes down to that. People are still trying to figure out, right, what are the right ways to look at these? What are the right numbers? And so you look at a few of these graphs and people say, okay, how can we get up on here, right? It turns out they can see the winds turning, and they can see the tides and trying to get into the game here and create a story. It's no surprise also on this list is a couple chains that were kind of old and dated and out and just not really a thing anymore, right? And now they're kind of trying to reinvent themselves into this new thing. Of course, there's a bunch of very relevant good ones too, right? But it's a mix of a bunch of different chains, right? Because they realize that if there's a chart measuring stats, you can easily play into it, right? And so you look at a bunch of the deals here and some things are going on. It's the same thing. You have a single user buying this and putting something that's already tokenized on chain, right? To then kind of have this thing and get your number up, right? And so that's what this list is today. Doesn't mean it's bad though, right? Again, everything's got to start somewhere, but that's what this is, right? Today, it's a lot of random stuff happening to try and sort of get a grip on what's really going on in RWAs and begin to feel our way around, right? It's like that. It's the sort of like the blind guys and the elephants, right? There's a bunch of people like feeling around like, what is this thing? Is this real? How do we do this?
You know what I mean?
Yes.
Everyone's kind of taking their cracks at it. But
yes, exactly.
You mentioned holders. We got 578,191 RWA holders on chain. Like guys, like.
Yep.
Can we get a golf clap? Like, let's go. Like, 600K on chain. Come on.
Exactly.
That's pretty damn good. I mean,
hell yeah, it's been great.
That number was probably really damn low end of last year, to be honest.
Yes. Yes, I think it was. Oh man, let's see.
It was like 200, I think, right, Chris?
It was even less. I think it started the year 80,000. I think is my recollection. Yep, 85,000.
And this is the total RWA holders over all of these networks.
Yes, that's right.
When we look at a per network view, I think this chart is going to look very different because, like Chris and Teddy are saying, is that on the the largest capital base of these RWA products, it's normally one holder, 5 holders.
Yep.
So obviously holders are up, but different chains are taking different approaches when they're going to market with these products. Chris, there was one thing that you mentioned earlier that I would love to just kind of loop in because and give us a really well-rounded perspective of this market. You mentioned risk and you mentioned yield, and those are 2 of the primary dimensions. But you also mentioned duration. And I think this is something that is flying a little bit under the radar, but is going to become important. And maybe with duration, that's why Ethereum is leading in this credibly neutral, like secured against World War III. Like people are seeing 40, 50, 100 years into the future. Could you just describe what is duration as it relates to RWAs?
Totally. Duration is a very simple concept. All we're talking about duration is the idea that these assets do not come back in a short period of time. So you put your money in, and there's some period of time in which you have to wait until the money comes back. There's duration for 2 things, duration on principal and duration on yield. Right. And again, people don't really understand the distinction between these things. Right. But those are 2 things you have to think about here. Right. If you look at your average T-bill, right? The duration on that is what, that's why they say T plus 1, T plus 2, or T minus 2. Like, it means you can get the money back in 1 or 2 days, right? But if you think about other RWAs typically are some sort of lending. That's what this is, right? You're lending to the US government, you're lending to, a Vietnamese coffee shop or some kind, you're lending to whatever it might be, right? So depending on who you're lending to and how you lend to them, the duration is different, right? So take for example, the classic example from last cycle was our friends at Goldfinch, right? Where you were lending out to emerging markets, right? And you would be able to sort of, in one click of a button, spread money all over across the world, right?
They were emerging,
primarily to emerging
Chris.
markets.
They were very
Yes.
emerging. We call those
Exactly.
ultra emergent markets.
Yes,
on Rollup
exactly.
TV.
Exactly. And that comes to the risk as well with duration, right? Because, and how to think about secured versus unsecured, all these different dimensions. But the duration piece ends up being, if you lend your money to, let's just call it an auto shop in Malaysia or something, right? Like, who knows if that's good, if that's real, if that's bad, when's the money come back? They've got, like, if you lend money to an auto shop in Malaysia, they have to actually run the business, So the cycle on that money can be anywhere from, 1, 2, 3, 4, 5, 6, 12, 14, 24, 48 months. We've seen with things like real estate. We was on the phone with a real estate project yesterday, very, very good one. But their duration, the shortest they can get down to is 15 months, which means you put your money in, you don't get it back for 15 months, right? And the thing that's a huge mismatch here is usually duration is correlated with yield, right? So the longer the duration, the higher the yield, right? Generally speaking, it's not completely true. We actually have a bunch of assets that have come out that are short duration with high yield. We get to that in a second, right? But big picture, right? That's the focus right now, is how do you get to high yield but short duration? Because look, crypto, right? In TradFi, people are used to longer duration. We have 401ks, we have these pension funds, we have big pools of capital that are permanent money.
I'm
right?
allergic to long
asset
duration in crypto. I'm absolutely
Yes.
so used to the liquidity being
Yes.
able, one click of a button 24/7. And that's this
100%. And that's the
mismatch,
magic of
Chris.
crypto.
That's like this
That's the magic of
mismatch,
it.
though. Yes,
Yes.
yes, it is a magic. Yes.
That's what we want about this thing, right? But you're totally right. That's the mismatch today. People are used to be able to say, look, I'd rather have incredible risk, right? Who knows what this thing is built off of, but at least I can pull my money out anytime, right? Whereas you're really now reducing the risk by a huge amount, but you're going to have to wait 3 to 6 months sometimes. People are very uncomfortable with that at this point, right? Like, look, DeFi's been around for 4 or 5 years max. So the idea of holding something there for 2 years is ridiculous, right? Yeah. So that's duration risk right now. And that's what this means. And that's a dimension people to think about. And that's why people are bullish on Ethereum. And that's why things have been good, because people are thinking about, when you're thinking about a long duration asset, you do have to think about where it's going to live and how you interact.
I want that thing to live in the safest place. Rob, I hope that gives you enough meat to chew on, because on this
I think
graph,
Wall Street is the audience and the market segment that is most concerned about duration, and that's why we're seeing these institutional products on Ethereum. But if you contrast that with the chart that's up now, you see, like, I want to ask Chris and Teddy what their audience segment is. Like, what is the topography? Like, what are the demographics of an asset, or excuse me, an user of Plume? Because Plume is the number 2, arguably. I don't know why they have Solana listed above you guys, because it seems like Plume.
Well, I think it's the most
3.
recent, basically.
Oh, okay, the most recent there. But for the majority,
just monthly. If you do the aggregate, which is one tab over in asset holders, that's the one that'll show you the.
You guys are in your a bit of your first bear market here, lads. Strap in, don't worry. We got bear spray. I can bring you some bear spray. That thing's gonna go
over
back
the
up.
course
That was a test pump.
Over the course of
July was a test pump, boys.
Over the course of 2025, you guys had the most active addresses. So I'm curious, who are the Plume users? Why are they the most active?
For sure. Teddy, go ahead.
Yeah, I can start. I mean, if you look at the tab Chris was talking about, in aggregate, we're the largest chain by RWA wallet holders, larger than Ethereum, Solana, all these other chains, even combined. The reason why that is because we've actually structured a chain where we can make these products feel a little bit more like things that, on-chain users are used to. So, our assets feel a bit more permissionless, a bit more liquid and composable through our Nest product. And so if you look on-chain at the stats, a lot of our users are within PUSD. They're within our Nest different Nest vaults. And what users are actually doing that they can't do on other chains is looping RWAs. So they can put money into an RWA asset on Nest, take that collateral token out, put it onto Morpho on Plume. And on Morpho, there's like 11 different, or I think it's like 9 different or 10 different, different lending markets. And they're all actually denominated within Nest LP tokens. And you can borrow against that and do these different looping strategies that the on-chain audience is, quite used to be frank. Like, Andy, I'm sure you farmed a bunch of stuff. Robbie, you too. And these use cases before we existed just did not exist, and that was the biggest issue with RWAs. Anyone can tokenize anything. I think tokenization is becoming a little bit more commoditized, but how do you actually get these users involved, and how can you actually put these assets to good use? And from what we've seen on chain to really drive retail adoption, this RWA looping strategy is only like the first use case that we've introduced. We have a bit more coming out, but this use case has driven a lot of retail demand, which is why on the charts you can see that all of these users, they're all on Plume right now.
And Teddy, what are the assets? And based on the 3 dimensions that we talked about earlier, risk, yield, and duration, where do Plume's users fall? Are they, I would take it they're probably low duration, high yield, low risk, right? That's the magic trifecta of all 3.
I would actually argue they were higher risk than most like Wall Street type investors, but
certainly, right.
For
If
sure.
you can get it with low risk, ideal. But yeah, where are they at on?
Yeah. So we have a lot of looping going on through one of our vaults called NBasis. The underlying, actually, we work pretty closely with the Superstate team. So it's their USCC fund that takes up a majority of the vault, and then their treasury fund as well. And so, these yields are high enough where the math makes sense. Like if you're borrowing at like 6 or 7%, the yield's got to be at least like 9 or 10 to then make sense for you to loop it a few times. So, these assets are pretty liquid. I think it's like T+3, T+4. The yields are closer to around like 10%. It moves a lot given the market right now. I think right now it's a different time in space. But these assets are the ones that are seeing a lot of looping demand. And kind of like what Chris was saying earlier, we have a lot more different types of RWA assets coming on that are in different asset classes. Like there's some PayFi assets that we're looking at where, the yield on it is almost like, 14 to 16 to 17% or so. And so what we're doing right now is really just educating folks on how these use cases work. And then we're going to hit them with a bunch of different new assets. And they're going to be like, holy shit, like this actually works on Plume. And we actually understand this now. Like the biggest issue before was there was just a huge information gap, like I mentioned earlier. Like no one really understood what they were doing. But we're making this, feel a lot more like home for these folks. And Chris, I know you wanted to chime in there.
Yeah, can I just ask one thing real quick, guys? T+3, T+4, do you guys just cover that duration risk and have some sort of like way to cover it? Teddy, how do you think about how that, or Chris, how does that exactly work?
Totally. So there are 2 ways to do it. One is you just like live into it, meaning like if the user tries to withdraw, you wait 3 days, right? And you can get the money back. Now, we like instant liquidity, right? Because we're crypto people. The entire purpose and the reason why, you see these numbers today, this chart up here, so it's like 580,000 total RWA holders, of which, nearly 300,000 are on Plume, 280,000. Right? So it's over a little bit over 50% of the entire market.
Chart.
Right?
I mean,
so
wow.
Exactly. It's more. So we have more users of RWAs on Plume than the rest of the next 10 chain combined, right? Including Ethereum and Solana, all these things.
Yeah.
Correct. And it's because I think we're one of the few that, and I think it's happening in this way, and that's why we're excited to expand to other chains as well. But like we're one of the few that are thinking about this from a crypto native perspective, right? I think at the end of the day, it's all supply and demand. It's a market, right? And a market has 2 sides. You have assets and users, right? And because, we grew up in crypto, right? Farming things and using things, we've always wanted to interact with these assets like crypto. And the dimensions of crypto are very simple, right? They're liquid, they're permissionless, and they're composable, right? That's the idea behind crypto native assets. And so we've tried to formulate these RWAs to fit that experience, right? We always think the magic is this Uniswap-like UI, right? To, from, swap. That's what you want to do for these assets, right? And then be able to plug this into Pendle, plug this into Morpho, or whatever you want to do and make this very easy to use. That's how we think about these things. You shouldn't even know it's an RWA, just like with stablecoins, right? You have no idea. It doesn't even matter, right?
So you guys
with Tether,
do cover
we were
it,
just
Chris.
promised.
Sorry, you guys do cover it, but you could also just offer duration to users. They may be a bit upset about it.
Oh, yes. Sorry.
You just cover it. No. I mean, look, I'll listen to the rants all day. I just wanted to make sure that we're on the same page.
No. So there's 2 ways. We provide those 2 ways. One, we have some vaults that are just straight up, we'll cover it, right? Meaning the user will have to wait 3 days, right? But for many of our vaults, we're doing aggregate vaults. We do composite vaults to blend a lot of these things together because these assets don't fit that dimension perfectly. Liquid, composable, and high yield, right? So the only way to do that we have today is we combine multiple assets together to get you there. And what's in there is a very healthy liquidity buffer, so you can always get out if you want. And ultimately, if we draw down the whole thing, sure, you got to wait 2 or 3 days, but we have a liquidity buffer, so you can get out anytime. And that's how a lot of the RWA protocols work today.
I love you guys, but I have to ask because this chart is so insane. Out of the 300,000 users, are they all KYC to participate in these products, or do you have any idea? Are any of them bots and Sybils? Like, give us some sort of sense of this user base.
Yeah.
Totally.
Oh,
Go ahead,
go
Daddy.
ahead. No,
No,
you go. I was gonna say, so basically what we've done is, we've integrated our chain and our product into all these different distribution channels. So if you look at some of our recent announcements, we're integrated into Alibaba's Web3 wallet, right? Their users go to the earn section, they can deposit straight into our assets. We're integrated with OKX. We're doing a few more really large partnerships. And so if you're outside of the US, what users can actually buy is a token that represents the economic interest and the yield of the asset. And therefore they can, if you're outside of the US, you don't need a KYC for these types of vaults. And that's been, a huge contributor to the exponential growth on this chart, to be honest. And by plugging into these different B2B or B2C channels, we can then really drive up the volume and drive up the users and really, make this thing sing.
That's
right, Chris. I know you wanted to say something.
Oh yeah, Chris, did you have anything else?
No, we have both in so many words, right? We have KYC users in here, but a big part of this is making this non-KYC and make it usable. Now, we run AML at the sequencer level and at the chain level and at the bridge level, right? So, one thing that we do make sure is that we run, we work with a bunch of partners on Clean Predicate and Elliptic and TRM and all these folks to really make sure that at the end of the day, the money's fine, because you can't have non-AML money, right, go into these assets, right? Because ultimately these are institutional assets, right? And so they need that clarity. We've worked with a bunch of providers to say, hey, look, are you comfortable with this? And they, we've been able to get it so far. And so that's been the idea. So we want to make sure there's some degree of control and checking on this stuff while keeping the door open on a user experience side.
Yeah, it makes sense. And I think you guys are taking this in a very thoughtful way, because what's happening, it's not on-chain versus off-chain anymore. Everything is moving on-chain. Like the DTCC own, 99.9% of, stock clears on it, and it's going to all be tokenized. So it's all going to be on-chain. I think the question is centralized versus decentralized. And we're using centralized in the front end and decentralized in the back. All of the centralized exchanges, Coinbase is using Morpho in the back. Like you mentioned, OKX is going to, you guys use Plume in the back. There's the Nest that's integrated with Alibaba. Alibaba, obviously centralized, but we have Plume in the background to provide this yield and these products to the world if they're not ready to manage self-custody. So I think this is the direction that we're headed, and this is how we bring everyone on chain. They're accustomed, they're used to, they trust, and they're familiar with centralized front ends that they need. If they want to talk to a customer support, they can. If they forget their password, they don't have to dig up the seed phrase in the backyard, and they can still have that customer support along with the digital asset products in the back end. So this is something that I anticipate we're going to get a lot more of. Eventually we'll get to a place where it's not just Coinbase and OKX offering, Morpho and Aave vaults. It's Bank of America, and you log into your Wells Fargo, and you'll have access to Janice Henderson's AAA CLO in the back end. And all of it is tokenized. And I know we're coming up on time, but I wanted to ask one more thing, kind of looking ahead to 2026. We know Jerome Powell's out. We know, the administration's taking control of the Fed. You guys see the money rain. We know the Fed cuts are coming. And, Teddy, you had mentioned, there's a lot of looping demand here. And we have to have some incremental yield above the stablecoin borrow rate, right? If borrowing is at 6%, maybe it's 9 or 10% that we need to generate. I'm curious how you guys see Fed rate cuts affecting this. I'd imagine it will bring the cost of borrowing fiat down. That will bring down the cost to borrow stable coins. Will we have a wider spread that we can capture by looping, or will it also bring down the yields? Talk through what Fed rate cuts in 2026 could do to the RWA market on chain.
Yeah. So yeah, I mean, with rate cuts coming, it affects certain assets, right? Like the assets Chris was talking about, like on the treasury side, these yields will go down, borrow rates will also go down. But what we're doing differently is actually now we're focused on very quality assets, like I kind of touched upon earlier, that are more like in different asset classes that could be like PayFi related or some private credit. And the beauty of these assets is, they're not really affected by these interest rate cuts as much, right? They're always uncorrelated yields. They're paying back users with stable coins. So as the spread kind of widens a bit, like you were saying, Robbie, and this goes back to your question earlier, actually, on who our users are. A lot of users will start actually doing more looping on Plume and within these different vaults. And we're seeing actually right now, a lot of our users are, in emerging markets and, Africa and Southeast Asia and these places. And the reason for that is because if you really think about it, the assets that we brought on chain, they're basically assets that you can't really access unless you're working with like a Morgan Stanley private wealth management arm, right?
Yes.
To get access to an Apollo private credit fund or a WisdomTree private credit fund, it's pretty much impossible out there unless, you have a net worth over like 5 mil.
Like if I walked into the bank and asked for that product at my local bank, they'd be like, buddy,
yeah, exactly.
What? Yeah.
Exactly. So the fact that we can actually, supply these assets and give these opportunities to folks in parts of the world where maybe their currency isn't as stable, or, these opportunities just aren't really in front of them, even for folks like, us, it's just a huge opportunity that we're opening up. And the unlock is just massive. And I think right now we're really setting the stage and the scene for 2026 to really pick up on not only the looping side, but just RWAs in general, right? And I know Chris definitely has a few words, so I'll pass it to him for this.
Yeah. As you go,
the rate cuts.
Private credit is on the screen too. Talk us through rate cuts, private credit. I did see a macro post from my friend Kruger Macro, Alex Kruger, one of the best macro voices on Twitter. He sent me this excerpt in a private chat about private credit market is not as squeezed and there's not as many cracks as people may think. It's actually quite sturdy and strong. He does not expect any cracks first half of 2026 or even in 2026 in general. Great news there from Kruger Macro. Talk us through rate cuts, yields, private credit, RWAs.
Yep, 100%. I mean, look, it's going to go nuclear. That's the answer, right? I mean, a very, very short story is as rates go down, borrow rates go down, right? People are going to want to find more money. It's very simple, right? And not only do they need to search for higher yield things, right? Because you can't just park money in T-bills anymore, right? The hurdle rate to actually get to different assets is also going to go up, right? Go down. And so the sort of aperture is going to open and the sort of pipe's going to open, so more money's going to flow in. And so it's going to be a mad scramble next year, right? For people to try and suck in as much money as humanly possible into their asset to make their asset the thing of the year, right? Just like we had the T-bill cycle of the last 2 years. Now we're beginning to see CLOs, private credit, what's going to be. And we've seen a lot of talk around private credit, just like you said, Andy, right? Like there are some people saying, look, it's actually pretty dangerous. There's a lot of bad stuff. It's actually, some people think it's quite not that, it's actually not that bad. So we'll see where it goes. I think it is variable. Some of the stuff is kind of crazy, honestly, right? Some of the stuff is incredibly sketchy that we've seen, and some of the stuff is actually fine and people just don't understand it, right? And so we'll have to figure this out.
Yeah, with a 10% average APY here, you ought to think there's risk involved. That's higher than stock market risk. Stock market will say 7 to 8% a year is what you expect from the S&P. So on the risk spectrum, you're probably even further than that, but not much further. $22 billion of active loans today on chain in RWAs, looking like the leaders figure. I know that this is also an interesting dynamic where they have like one product and not many holders as well, but interesting capital allocation to them. Maple, Tradable, Fact, a couple others. Guys, I think this is going to hit 100 billion in 2026. I think that's actually low. I think this could 50x in 2026.
Hell yeah.
Hell yeah.
My bet in 26 is a 50x on this. I think it's 25 to 50x locked. That will put us at
guys, what
math guy?
400
billion to 400 billion to
what's
a trillion
the best
range.
way to get exposure on the growth of this asset? Like, think if this is right.
Don't tell us.
Here's what I think. Here's what's going through
Come on,
people's minds. It's like if
all
I
coins
buy,
are cooked, man. Everyone knows
buy
that.
the
Come on.
CLO product because I think this is gonna, the RWAs are gonna go nuclear. I get 7%, and it's like, okay, yeah, that's great, but I think RWAs are gonna 4 or 5x. I want the 4 or 5x. I don't want the 7%. Yep. How do I get the 4 or 5x?
100%. Look, one, I think it's important for everyone to use a couple of these things to get a feel of which one's going to work, which one's going to take off. And that will help you then dictate where do you actually make the bet. And look, the bet's always in infrastructure. Which tools are going to power this? Because like you said, I can put $1 billion into CLOs. I'm just getting 7% all the way up, right? How do you actually get real exposure to this and bet on this category, right? You got to bet on the tooling and the infrastructure is going to power this stuff, because as the volume grows, those products will start to generate fees and spit off cash and grow as well. And those are going to be real businesses. And that's what we're really excited about. And so I would look at applications that are really building and bringing new assets to market, tools in and around these things, right? Whether you're doing lending, borrowing, leverage, insurance, all these types of things. There's a lot of interesting things everything happening around these assets, and of course core infrastructure as well. You know, the chain level and up and down. So I think across all three, all of them are going to go nuclear and going to explode. And so, you know, if it's me, I'm betting on all of them, right? And that's why, you know, for us at Plume, we've got the base layer, but we also have a bunch of applications that we're taking around, right? Because that's the whole point. We think that this is a big trend, not just for one area. It's going to be across all of crypto. And so I think there's a tremendous amount of protocols that are really interesting here that are going to go absolutely insane next year.
Hey, happy holidays,
To
boys.
be specific, top 3, Chris? Top 3
Oh, God.
applications?
Man, let's see.
Oh my god.
The dangerous question.
Put your freaking
Yeah.
camera on if you're gonna ask these questions, bud.
Oh man, three's tough, dude. Three's tough. But look, I think there's a ton of interesting ones. You know, I'm obviously a big fan of what we're doing with Nest, right, which is our yield protocol and aggregation point. You know, I still think there's a tremendous amount to do with USDS and Sky and Maker, right? I think they've done an incredible job. So I think there's more to go there. People think that they're big already. They're not. There's so much more to go. So I think that's a very, very straightforward bet. I'm so bullish Athena, right? Athena also knows what they're doing, and they're not idiots. Those guys are, you know, they've done very well in the basis trade. There's a lot more to come there. I think on core infrastructure, I look at things like different lending protocols here. I think Morpho is an adjacent area. Obviously, I think you know, killer. I think Aave's obviously going into this area as well. And you have newer things as well. You know, you have some of the insurance protocols like Cork. You know, you have some of the ones like, you know, the 3F Labs recently is another one that does looping against these things. And so I think whether you're going early stage or later stage, all of them, like, that's the beautiful thing about this market. This market is literally trillions of dollars that's going to come in, right? So if that happens.
Yep.
Exactly. If that happens, all of these are going to explode. So I think the majors are going to be great. New ones are going to be great. And tooling and asset issuers all around.
Ladies and gentlemen of Rollup TV, there's a new category of assets to be invested in 2026. As we roll out our holiday campaign, you will see our market map kind of shape up over the next couple of weeks, and we'll drop the full one. And we're going to tell you what assets and what protocols and what teams we're looking at for 2026. It looks a lot different than 2025 and 2024. And we're very highly convinced of our thesis here, nearly certain. What we talked about today is really in line with what we believe here to come. Guys, stay tuned for the holiday campaign for the awards. Thanks for joining us on Money Moves Fast, episode 14. Been an absolute pleasure, guys.
Thanks, boys.
Insane.
Thanks for having us, man. Happy holidays.
Happy holidays,
As always.
boys.
Happy holidays, guys.
Happy holidays, my
Quick
guys.
break. We'll be right back, guys. See you in a
Thanks,
second.
See you
fellas.
guys. Thank you.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its Rio upgrade, Polygon is now one of the fastest chains for stablecoin transfers and payments. Visit Polygon Technology to learn more.
Kalshi is the world's largest prediction market. You can trade on anything in all 50 states. Go to kalshi.com to trade today.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Havachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform that is ready to go. Head to infinify.xyz.
Halliday is unified crypto payments. Give your users more wherever they are. Go to halliday.xyz to never write a smart contract again.
Open, stable, borderless. Frax is building the next generation of stablecoin infrastructure for the digital finance era. Visit frax.com to learn more today.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
I'm up 25% on Rivian in 3 weeks. It's the future of finance. We're actually CTOing this stock, according to Ansem. RIVN is the ticker, not financial advice. This is definitely not a stock pick show. It's up another 10% today. I bought right before it had this vertical ascension. That's looking good. I'm long Zcash right now. End of yesterday's stream, I remember I looked down and I was like, I had one of these moments solo, like, where's Rob? This market's cooked. It's all over. And that was the bottom signal. It's fire. It's so fire. Like, dude, Santa rally? Can we please have a bounce? Please.
I mean, look, Zcash is up 15% today. Hyperliquid is up 9%. Things are only down like a couple percent this week. Obviously, Bitcoin went from one.
I mean, Hyperliquid just had a liquidation cycle happen, right? It dumped from 30 to 22 in a matter of 4 days. So that's a liquidation cycle that just happened there, right? So
here's the thing, man.
Okay, here's the thing, guys. Here's the thing from Sage Robert Clagis. Please tell us the thing. I'm going to call my financial advisor. Come on, hit me.
I remember when coins used to go negative 80% and no one batted an eye. What are these?
Yeah, these people these days, Bitcoin's at 87K and we're like crying over here.
For a lack of a better term, what are these pansies complaining about?
I don't know, Rob, but I'm telling you, Christmas rally would be nice. Pretty nice. Guys, this is our 99th episode. It's been an absolute pleasure doing this show.
You got to clarify. This isn't number 99 of Rollup TV.
Yeah, this is like number like
obviously
899.
Thousands and thousands of interviews.
1,899 episode, actually.
We've got
dude, so Cat's bullish.
Planned for
CL207's bullish Amazon thesis is hilarious. He called the top.
Okay, so guys, just chill. Just buy assets that are gonna go up.
Almost every founder I spoke to at Breakpoint regrets launching their token. Crazy, right?
I mean, I guess like if you look back at like .com bubble.
Yep.
The coins that did well launch, it's, everyone wants to launch at the bottom and then paint a beautiful chart on the way up.
Yeah, RIVN coded, down 90% from IPO, Moondat.
Right, that's more like it.
Wow, Plume and Solana now live, real world yield. How did we not talk about this? I feel like they were probably shipping this announcement on the stream. I'm so dead. Yo, y'all just ship this on the stream?
That was a fun chat with the Plume guys. Year in review, tokenization.
Real world on Solana. Very cool. Both those chats were good, man. I think those year in review vibes is great. It's been an incredible year. I mean, this is the biggest year ever for the Rollup.
It is, and I think we've got a lot that we're gonna unveil headed into 2026. Plume guys know about it. There's quite a bit of exciting things. I'll just say that there's some categories we're really excited about. I do think a lot of the biggest companies in the world now have on-chain strategies and are going to launch products on-chain. And I think there are, I mean, Chris did a pretty good job of answering that last question, right?
Yeah, he did. He gave us exact names of companies, all of that.
You can go and you can buy these products, and if you're looking for 7%, that's what you want to do. But I would be interested in like a prediction market is maybe even a more direct exposure to the RWA market.
Dude, Plume retweeted
obviously-
Alex's tweet. That's so electric. Yes, buddy.
Shout out Alex. Alex is the man. Saw that guy in NYC. Hooked it
Wow,
up.
dude, they just launched that. Sorry. Please continue. I'm just scrolling the feed here, kind of basing out. What do you say we close this out and have ourselves a weekend, lad? I think you're coming down. Let's have a beer or two. Go play some golf.
Yeah, that's the plan. You want to grab us a tea time for Saturday morning?
I got a basketball alumni game, but let's take this off stream. Ladies and gentlemen, Rollup TV fans, haters, lovers, desirers, friends, family, foes. Inshallah.
Ladies and gentlemen.
Mahalo.
Yo,
Gracias.
hey,
Obrigado.
Andy.
Para todo. Yo.
Happy Hanukkah, man.
Yo, man, Merry Christmas. I'm not Jewish, but Happy Hanukkah. Much love, man.
Happy Hanukkah and Merry Christmas to
See
all
you
of
guys
our
tomorrow.
Jewish,
No, we won't.
Christian brothers
Happy
and
holidays
sisters.
from a Roll-Up gang. As
Happy
we speak, we are
holidays.
very, very relaxed because we've successfully executed our December goals, our biggest months of the entire existence of this company, November and December 2025.
Guys, don't trade on leverage. The coins are going to go up.
Slow money and
Just-
crypto wins. Is that what you
just
said?
stay-
Yeah, it's been
stay-
6 years. 6 years.
Stay
6
patient.
years of locked in. All right, yeah. See you on the moon, bud. All right, yeah. Quant just called. Bitcoin's going to 250. See you guys there. Peace.